Hey everybody, just a very small note before we begin this episode. Our guest Justin has shared with us an ebook about in-house banking that complements this episode. It is not mandatory at all. You can listen to the episode and still get everything. As you will see, some in-house banking tasks can actually be outsourced, and Treasury Outsourcing is exactly what this episode is about. Head to corporate-treasury-101.com, head to the article section and look for the one with Justin to download the ebook for free. The link is, of course, in the description. Enjoy the episode. Welcome to the Corporate Treasury 101 podcast. This is the third and final part of our full interview with Justin Callaghan, where we discuss examples of treasury outsourcing. In the episode of today, expect to learn how does FTI Treasury leverages scale for efficient FX risk management across multiple companies. In which specific areas does FTI Treasury specialize in outsourcing and how does it benefit clients? What measures does FTI Treasury implement for sustained success in outsourced treasury functions? Some concise examples of successful treasury outsourcing projects, and like always, much more. Treasury outsourcing, when done right, has very interesting intersections with Treasury Consulting, which made for a very interesting conversation with Justin, who has a tremendous amount of knowledge in the field and managed to answer very well to some of our toughest questions. We hope you will enjoy the episode. If that is the case, and when you're thinking about how you found our podcast, chances are that it was through word of mouth, social media, or a recommendation from your favorite podcast platform. And this is our only request to you. The best way you can support the podcast is to head to YouTube and subscribe to our YouTube channel, Corporate Treasury 101. That will mean the world to us and help more people learn about treasury. On another note, this episode is brought to you by Automation Boutique. Automation Boutique is empowering treasury, finance, and risk management with tailored automation solutions. They use robotic process automation, or PA, AI, APIs, and Power Query to create automations that can work with your existing systems. We partnered with Automation Boutique as we really like their approach to innovation and how they help the industry. For this partnership, they came up with an AI-powered automation self-scan that can help you find out if a business process is suitable for automation and how to best get started. It is totally free, non-intrusive, and only takes about 15 minutes. What's great is that the report you will get from the scan helps you determine if the benefits of the automation outweigh the costs. If you want to have a look, head to the link in the description or to automationboutique.com/corporate treasury 101. And with all that being said, please welcome Justin Callaghan.
Super interesting. Take us into the systems that you use then, Justin, because we've dabbled on it for a bit of time now. Can you share names where you feel comfortable to share names? Yeah. Which systems do you use? Which ones are built in house? And which ones do you use religiously yourself and stand by?
Yeah, treasury technology is a dark art, isn't it?
Because we've had a few different vendors on. We've had Kariba on, we've had FIS on, we've had a few fintechs on, a lot of FX platforms we've had on as well to discuss those because they're obviously experts in each of them. So we have already, our listeners have a bit of an idea of the overall landscape. But
fair enough.
As you are the experts in treasury, as in that's why people should come to you. What systems are you using?
Well, so we would view us as kind of practitioners, right? So we're, as you say, we're kind of at the coal face, right? The users of these systems. So we've nothing to kind of gain from saying yay or nay against them. We just want to make sure that they operate well. So first of all, just to answer your question straight up, we use third-party software. We are not software developers. We don't believe that that's where we need to be be blunt about it. We paint ourselves as experts in managing treasury, and if I went into a really large multinational company, many of them would run a mile if they saw that they were developing their own internal software, and as you know, some do, but they generally, at some stage decide that this wasn't a great idea. Let's go and get a third party who'll manage this all on our behalf. So just to start with that, like what we do is we have built a treasury infrastructure that we believe works very well for our clients and is best fit for our clients. But to be blunt with you, I would be reasonably agnostic around most of the systems, in that most of them do what they say they'll do, to a greater or better extent, right? Do you know what I mean? Yeah. So if you don't mind, I'm actually probably not going to say names, because we deal with lots of different systems providers in general. I told you who our main treasury management system is, and they're great, but you know, it is, at the end of the day, it's a treasury management system. Do you know what I mean? And maybe it's more about the relationship, and we've been using that system for a long time.
Used to it.
We've built a lot of integration. Right, we know the system. We have a lot of stuff going on with it that makes sense for us. But if you were to start from the beginning, I'm sure it'd be an absolute beast to try to get to put in place. You know, so I'd start by saying, like, you know, that really, in reality, I feel a lot of the systems can do what they say, and then it's up to sort of personal preference, you know, around that. The other thing I'd say is that we have generally gone out and looked for systems that do specific things that we want to do, right? What the hell what does that mean? Like in my books, right, gone are the day of the treasury management system, right? And it does everything. You know, like, we've become into a much more modular world where, you know, you have your core treasury management system, but then you have other systems that do other things because they're specialists in that area and they do them really well, rather than just trying to rely on one name to kind of do everything. So if I briefly outline what our sort of infrastructure looks like, okay, so yeah, we have our core database, which would be the treasury management system itself, the TMS. And then, generally speaking, from a front office perspective, we're using one of the FX trading platforms. That would be the main, you know, our main dealing is in FX. Now, we do, you know, a lot of money markets and deposits and stuff like that, but from a volume perspective and a value perspective, our main dealing is in FX. So we use we use FXO, but we also use 360T. So, you know, we're happy to use any sort of trading platform. But if people ask us, just because we have it well integrated, we generally will fall towards the FXO platform. We will have that STP'd directly into our TMS. So trade gets done, gets polled every 2 or 3 minutes, I think, something like that. So it's almost instantly into our treasury management system. On the back of that, we have the industry standard confirmation system. Again, instant flow through in terms of when the deal gets executed. So you're talking, you know, between confirmation and execution, really short turnaround to catch any potential issues that may arise. On the back of that, so that's, you know, that's 3 sort of integration systems, right? We have FX dealing, we have confirmations, and we have the core DMS. The other system that we would use, and we mentioned earlier on, would be we have a cash reporting and forecasting system. We actually currently use 2 of them depending on the client's requirements, and that is integrated in a number of ways. It's integrated with the treasury management system to get all details of treasury flows. We'll have it integrated with the banking system, so that we have, you know, kind of opening cash balances and cash, you know, actual cash flows that we can, you know, do actual forecast for and stuff like that. And then additionally, we generally will have that forecasting system integrated with our client's ERP side. So, you know, to get the AP and AOR. So again, you have a system, a modular system of the forecasting that is then integrated on our side with the banking system and the TMS, and then also linked in from a forecasting perspective with the client side ERP. Also, importantly, you know, obviously that's a kind of a cloud-based, web-based system. So we're not doing forecasting in isolation, right? We need to know what's happening around the world. We need to know what are the flows going to be in France, what are the flows going to be in Germany. So whilst we will try to obtain all the AP and AOR information on a global basis, if there is a global ERP, in many cases, as you know, there might be a global ERP with a couple of fellas won't be on it in Spain and 2 lads in Portugal won't be on it either. So obviously there's access, you know, there's local access from a forecasting perspective as well, to be able to kind of input. And also, you know, they might have one-off tax payments or something like that. So we provide access globally to that forecasting system. So there's another system, that's the cash reporting and forecasting system. Obviously, we have kind of market feeds coming in from various different areas, which will help us produce mark-to-markets and all that sort of stuff. And then our other main integration from our systems integration from the TMS perspective is with the banking systems. So, we need to be getting the MT940s or CAMPs or whatever they are out of each of the banking systems and into our TMS, so we can track, what's going on. We can do bank recs, we can track intercompany movements, we can apply interest to them, all that sort of good stuff. And on the flip side, we need to be able to get payment files back out of the TMS in there. So we're providing all of that sort of in environment in terms of the banking integration. And then probably the final key integration that we do, which is pivotal really, to be honest, is the integration of our treasury management system with the back-end accounting system of our client. I mentioned that before. It's often, it's often SAP or one of the big kind of ERP systems. And what we will do is we will produce precisely mapped treasury accounting file that will go into that system. So that can be really complicated, so it could have, in some cases we have like hedge accounting for derivatives that's, split up between the time value, the option value, and the remaining points, and you're putting
lovely stuff.
Yeah, exactly. And half it's going to OCI and the other half's going to God knows where. But so it can be really complicated like that, or it can be pretty basic, right? It can be just, this is the intercompany balance between the treasury entity and whatever, and this is the accrued interest. So the important thing is that it flows and it happens and it works easily for the accounting team, really, on the far side, because the last thing we need to do is create any sort of friction between treasury and accounting, because what we're doing is making their job harder. So one of our selling points is also, look, from an accounting perspective, we'll make this a lot easier for you. The last sort of system is obviously the netting system that we use. So again, we use the brand leader, I suppose, in reality, globally from a netting perspective, and we integrate that both with the TMS to get any kind of intercompany netting flows that might be coming up, and then importantly, we help all of our clients to integrate it either with a centralized ERP environment, so if they have AP and AR on a global basis, great. But again, more often than not, we have a mixture between kind of centralized and then localized uploads of invoices and the likes. So that's kind of, it's fair to you lads if you caught all that, because it was a lot in 3 minutes.
So, that's good. I think you laid out the pillars of a good treasury organization, essentially. So I think that was really interesting. Because there was, as I understand it, I guess there's 2 ways in which you work with companies then, right? There's the way in which maybe they have a very basic treasury operation at the moment, it's just some line on Excel, or indeed they have a huge growth phase, like an acquisition or something like this, that requires all of a sudden a proper treasury infrastructure. In that case, they can just tap into your systems. It's kind of the flow of information, data, and executions is everything's coming through their ERP, it goes out into your systems and then comes back into their system already managed, right? Correct. That's one setup. And in that sense, you're using all of the systems that you just mentioned there. The other setup is where there is an existing treasury team, there's an existing treasury operation, maybe there's a new group treasurer that came in and says, hey, look, we need to start outsourcing some of this stuff so that we can do it at scale. It can be done better. We're not doing netting. We should get someone to do netting or whatever, right? Something like this. Yeah. And in which case there is treasury infrastructure already in place inside the company, and then you're kind of coming in on top. In that setup, I guess it's a bit of a match between what of their systems you use and what of your system you use. Do you just get access to their softwares? Like, how does that?
Yeah, like if required, we get access to their software. But generally speaking, if there is any kind of integration, we try to automate it. So generally speaking, if there is a requirement, for instance, to use their treasury management system, or for them to have a full treasury database, we may still use our treasury management system, but then extract a file which will be directly uploaded into theirs. So do you see what I mean? So there's kind of ways and means around it.
And you'd rather do that. You'd rather keep your system and run it with that, because I guess you're experts.
Correct, and it's fully, the environment is fully integrated. To be honest with you, Sammy, so we're trying to. I suppose we're trying to get efficiencies where possible. Another thing I didn't mention, just to kind of bring it into the fore as well, is that we have a really significant RPA suite in place, so robotic process automation in place, whereby we are using that to undertake nearly all of our cross application processes, if that makes sense. So now when our dealing team comes in the morning, all of the information that they need from a cash positioning perspective is already there, right? So our robots have gone off, they've got all the statements, they've integrated them into a system, they've gone to the treasury management system, they'll have put that all into the relevant database, it'll have gone and got currency rates, it'll kind of tell you what's maturing. Do you know what I mean? So we're methodically going through all of our processes to try to do that, because to be blunt about it, we have people here who are quite skilled, and the last thing we kind of need them doing is opening spreadsheets and
logging.
Exactly. So that's something that we've really invested heavily in. It also was a massive risk reduction. There's no fat finger risk coming into play. So it has multiple benefits, and it also has a business benefit, to be blunt, in that you don't need as much resource to be able to undertake the process.
Just an automation boutique is one of our sponsors.
That's right.
That's line is as well as
exactly.
RPA automation for companies.
Exactly, and some of the stuff that they're doing is great in terms of, as you say, eliminating the risk and bringing in a kind of a more streamlined process.
Justin, how does it? Because I'm keep asking myself this question, and maybe some people in the industry will as well. If you use your own system, it means the cash at some point needs to move from the client system, or the information needs to move from the client system to your system to then go back to the client system. But so to take a very practical example to understand how it works, if we take the netting part, for instance, what does it mean that you aggregate? Do you create one instance per client within your netting system? Or do you say, okay, and that's one of the other questions we want to ask you, we integrate it into the pool of the other clients' data, and then we net everything. So that's major benefits, obviously, but then you mix everybody. Or how does it work?
No, we definitely do not do the latter, which is the mixing of everybody.
Okay.
That's just
which would make sense.
Just a big no-no. To be blunt, there is no commingling of financial assets at all. Just to be clear, every client is very much ring-fenced and bucketed within their own legally owned systems, databases, and bank accounts, and they're nothing to do with us. They are theirs 100%. All we are doing is providing an infrastructure and a resource to undertake particular processes. So, for instance, when we onboard a new, let's just stick with netting because it's easy, right? Maybe it's not easy.
Understandable.
I shouldn't say that, should I?
Yeah, exactly.
When we onboard a new netting client, we will go out to our netting software provider and get a new netting database for that client. Do you know what I mean? And it is specifically for that client. The login will be whatever at the client's name. It's a specific defined database. All of the information flow that goes in there will come from client data sources, be them ERP, manual, other invoice systems, whatever. And it will only be those clients' data sources, and the net values will only be the netted values of that client. The net values will be sometimes they're traded cash, sometimes they're done across, intercompany accounts. So we can do it either way. If they are traded in cash, the trades are done with their clients' counterparty banks in that client's name, execution on behalf of, and then they are settled across that client's bank accounts. So, it's very much ring-fenced, no commingling. We are just providing an infrastructure and a resource to get certain processes done. And it's important. It's a good question because it's important that people would sort of understand that.
No, 100%. Take us into how you like. I guess let's stick to the netting example of outsourcing, right? So let's go all the way through to netting, outsourcing. A company comes to you and say, Corporate Treasury 101 is coming to you and saying, hey, Justin, we're getting massive with all of our sponsors and our relationships, and we need to start intercompany netting because we have an entity in different places as well and everything like that. And so tell me what happens internally for you. Do you guys have like a netting expert that is across different clients? Or if I also need netting and I need some FX, I need some other operations, do I just get my own FTE out of FTI?
No, we certainly have.
Do I get the entire team?
Exactly. We have experts in particular areas, and we do have a netting expert, right? But they will manage the netting process, right? But they don't manage everything to do with it, and that's pretty fundamental, because any of the processes that we undertake are subject to the normal segregation that you would expect within a treasury operation. So whilst all of our clients will have a main contact, that main contact certainly will not do all of the things for a client, if that makes sense. Yeah. So you make a good point, right? Netting, right? Like for instance, if you're going to cash settle netting, you need to actually execute FX deals. So now you're not just doing netting, right? You're also needing to have access to FX All and probably a treasury management system. You're probably also going to need access to banking systems in order to settle out the netting. Okay, so you say let's just do a bit of netting. It's a little bit more complicated than that. Now, having said that, right, we do have clients who would undertake netting, but then just settle it all on a non-cash basis. So if you think about it, they'll just settle it all across intercompany accounts. Create a debit and a credit on a ledger, and instead of having a receivable to Spain and an owable from Germany and a receivable from USD, you'll just have a single. You just have a single balance with either an in-house bank or some kind of entity, which is it's a very clean way of managing netting, and much less complex, because now you've removed all of the requirement for FX dealing, cash settlement, bank integration, and all that sort of stuff. So you mentioned before that we're plug and play. We are plug and play, right? But everything we do is customized for each client. So nothing is the exact same, to be blunt. It all looks a little bit similar. And we obviously have economies of scale and benefits of knowing what we do, but none of it's the exact same, because everybody has a slightly different system requirement, slightly different information flow, maybe keen on non-cash versus cash. It's all just that little bit, that little bit different. So, I suppose you ask, like, take us through, how does it look? Let's say, for instance, with netting, like the first thing we need to sit down with a client to do is define what they actually want. Okay, you want netting, and that's fine, but how do you want that to result? Do you know what I mean? And how do you want that
why do you want netting?
Exactly. The other thing we would generally do, just to stick with netting, for instance, is we would look for some of the data on the intercompany flows, which will allow us to define what the likely benefits financial of netting are. I have to say that when we implement netting solutions with clients, generally the financial benefits is what starts, but it's all the other benefits that accrue after that they sort of go, oh geez, this is great. We're centralizing all our cash flows to one sort of day in the month. We've totally cleaned up deflated our balance sheet, because we don't have 1,000,001 intercompany balances. So it's funny, they are often the things that lead through. So defining that sort of data flow is really really important. And then from there, what we generally do is we'll commission the database from the software provider, and then we start working with the IT team of the client to see how they want to get the AP and AR data in and importantly out, because there's two elements to it, right? Anything that's you need to get information in so that it can get netted and settled, and then you need to get information out so that it can get cash allocated effectively across the ERP. So once we've done that, then we generally move into kind of user training perspective, because netting is a funny beast in that unlike a lot of treasury stuff, like if we're managing liquidity systems and stuff like that, you kind of do it in isolation a little bit, just within the treasury team. Whereas netting is really it's a business touch point, right? So all of the subsidiaries around the business are going to see it. That's great in many ways, because it gives treasury a good kind of stage to show off what it's able to do. But it's also a risk, right? Because you need to do it right, because you don't want to get egg on your face across the whole company. So we would generally manage a range of kind of training sessions. Normally we're doing this in global companies, so we try to do kind of them across the time zones over a couple of weeks, which makes people feel comfortable. They know what's going to happen. Generally speaking, if they're coming from an environment where they're not doing netting, what we try to promote is the workload benefit of this, right? You're going to have no more recs. You know what I mean? You're going to have all these things settled out. You're going to deflate your balance sheet, etc., etc. And then effectively we move into the live environment, and we run through the netting process. I mean, we have a very well defined manual, what we refer to as a manual, which lays out kind of all the steps of each netting cycle. But it's a very smooth process once you kind of get up and running, and people generally become very comfortable with it within 1 to 2 cycles. Our clients in general would run a netting cycle every month. That's the sort of general. We've then a good few that run a netting cycle every, twice a month. And then we have a handful that, do it really frequently, maybe every 5 days. Sometimes that's if they have a really high volume of intercompany trade that is creating FX noise, they want to clear that off the balance sheet as quick as possible. Do you know what I mean? So that would kind of drive some of the frequency. So it is interesting. People use netting for different end purposes. So it's always interesting to see why, and to understand why a client wants to do that.
And so because there'll be treasurers listening to this right now. So what effort is it from me as a treasurer? So what do I need to give you, Justin, so that you can set up mine? So list them off for me. If I want to set up netting today, what are the things that you're going to be taking my time to get done so that I can win my time back from?
Yeah, that's a totally fair question. So the key from a pure netting perspective, actually the treasury touch is really light, because there's very little. There's no treasury touch point really. All you really need to do is get the AP and AOR, the intercompany AP and AOR information from wherever. It might be an ERP system, it might be locally input, it might be a local accounting system, whatever. And we generally work with either the centralized IT system or the local finance managers to do that. So that's potentially an effort on the client side, but not necessarily the treasurer, if that makes sense. The treasury elements come into it if we need to do the FX dealing and we need to do the settlement, right? So then, generally speaking, again, we manage most of the setup on the FX trading platform. So generally speaking, all we need is an introduction to the banking partners, and as you can imagine, generally speaking, they already know us, right? So it's not new to them, because as I said, there is that kind of concentration of banks that we generally deal with. So that's reasonably straightforward. And then the other thing is we need to be set up as users on EB systems, and to have all that set up. That's really the bulk of the work, client side work. So it's quite light.
Would I not have to we need to establish treasury policy for the netting system, right? We need to establish what are the controls, what is out of what's our risk appetite on it. I guess with netting, it's not really risk appetite, but there's the whole FX aspect of it, like you mentioned there as well. So generally there would be a lot of aligning on for my company, I need to explain to you my business model. I need to explain to you all my subsidiaries, where they're set up, why they're set up like they are, et cetera, et cetera. We need to go through this whole process as well.
If we're taking on cash management, that's absolutely the case. If you're doing netting in isolation, not so much, because there's not really.
It's just the bank account.
Exactly. Yeah. It's just kind of it's a flow through, right? It should end up netting. By definition, should end up having no impact, right? Or there's something's going to be wrong. But you're absolutely right. If we're looking after cash management and stuff like that, we need to agree risk parameters and stuff like that. But actually, to be honest, we normally would work that out in maybe an afternoon's workshop, something like that. We generally go visit our clients. Okay. We bring with us sort of a suggested approach. Do you know what I mean? And then we will adopt
as the treasury experts.
Exactly. Well, it's just.
I would ask you to say, what should I do? And
it's not necessarily what should. It's more, look, this is kind of what we would generally do, and really like the key things are, like, for instance, right? Some clients would prefer to run a little bit of a higher currency exposure because they don't want to execute more deals, right? Do you know what I mean? Often the differences are really subtle nuances. So we'd have clients that would have, for instance, an FX tolerance of the equivalent of $100,000 US. That's probably about as low as you're going to go, because you're not going to really want to be doing deals for anything lower than that. But then we'd have other ones that would have 5 million. And it's really just understanding, and then obviously some people would say, well, I'm happy to have a 5 million euro exposure, but I don't want a 5 million ruble exposure, or whatever, So it's working through those. I know, and as you say, like, you can only work through them, right? Because they will be individual to a company. Someone who has significant operations in Mexico may be willing to have a significant exposure to Mexican peso, even though it could be volatile and the interest rate's very high. So horses for courses. It's a matter of sitting down and working through it, but it's not as complex as you might imagine. And in fact, we seek to not make it that complex. What's the saying? Keep it simple, stupid. It's overcomplication just makes things difficult and potentially sort of increases risk. So we just sort of take that view, and we take a very pragmatic approach, to be honest, to most of these things.
Sounds great.
Amazing. Justin, I think we unfortunately have to bring this absolute masterpiece on Treasury Outsourcing to an end.
Only an Ireland Fiji.
Just that. Anything else you'd like to add on the different topics we touched upon? Anything we didn't discuss that you think might be important or interesting to bring to our audience?
I mean, listen, guys, we've covered a lot there, right? anybody who makes it this far deserves a coffee. No, look, listen, Treasury Outsourcing. The one thing I would say about it is that it kind of flies under the radar a little bit, and it's a consideration that should be higher probably on people's agenda. Only just a consideration, right? When looking for solutions to particular problems, thinking outside of the box can sometimes be a benefit, both kind of financially and from a process perspective. The other thing I'd say is that, like, if anybody is sort of considering looking at any sort of solution, like, right, really the key to it is to find people who've done it before, right, and talk to them. That's the because you can have people from the business itself can kind of tell you anything, right, and outsourced providers are very different in nature, so you need to kind of find your fit, let's put it that way, someone who can do what you need them to do, and importantly, remember this, that really these people are going to be part of your team, right? So, can you work with them? Would you give them a job if they wanted to be part of your team? They are kind of important considerations. But really, at the end of the day, I would suggest that if people are interested in the topic, there's loads more resources on our website, FTITreasury.com. And in addition to that, if people are seriously kind of interested in discussion, obviously we're always open to help people. Even we talk to people all the time, just from a discussion point of view, and it doesn't ever come to anything. That's totally fine. And again, reach out to your peers that have done this, see what they feel. There's nothing better than a peer sort of recommendation for anything in the Treasury world. I think we probably all know that. If you were looking for a good banking partner, you'd definitely pick up the phone. If you're looking to put in place a new funding structure, you'd definitely pick up the phone. So why not do it for these things as well?
Absolutely amazing. So you named it FTITreasury.com. Anything else if people want to know more about you or FTI Treasury?
Yeah, well, look, as I said, there's lots of resources there on the web. We also have a chatbot there, so feel free. But also my personal email is there, and I'm always open, always interested to hear what's going on. Someone called me a Treasury nerd once, which I'm not sure if that was a compliment or not.
It is, 100%.
We get called that all the time. Yeah. But 170 plus episodes of Corporate Treasury. We're definitely Treasury nerds as well. Don't we?
Yeah, I didn't want to say that, guys.
We'll take it. Justin.
Thanks, folks. Talk to you all soon.